Good afternoon, everybody. Welcome to part 4 of the home buying presentation webinar of the spring presented by Affinity Federal Credit Union. Today's topic is credit and what you need to know, part 4. My name is Oscar Cordova, and I'm the External Affairs and Financial Education Manager here at Affinity. I am in charge of the financial education efforts of the credit union focused in the areas that we serve. Before we begin, I would like to go over a brief disclaimer. The disclaimer states that all of the information provided to you this afternoon, it's intended to be for informational purposes, for educational purposes. It is not intended to be legal, tax, or financial advice. Since this is a home buying presentation, if you want to have a conversation with a mortgage loan officer, through the presentation, I will provide ways for you to connect with one of these mortgage loan officers. Or Carolyn, our presenter today, should be more than happy to provide this information for you to start your home buying journey. Today's presenter, as I just mentioned, her name is Carolyn Morgan-Besser. Carolyn is our AVP of Mortgage Originations. She leads a team of 18 mortgage loan officers who work diligently to provide the best experience for our members. Carolyn has been in the mortgage industry for over 35 years, and she loves assisting members with achieving their dream of home ownership. With this said, since Carolyn has been in the industry for so long, I encourage everybody to ask questions. Now is the time for you to ask questions, and Carolyn will be more than happy to address them at the end of the webinar. As a reminder, this webinar is being recorded, and the link to rewatch this presentation will be shared with all of you in a follow-up email that will be sent in the near future. If you want to ask questions during the presentation, feel free to use the Q&A option. And of course, Carolyn, as I just mentioned before, will be more than happy to address them at the end of the webinar. As a final note, I will be sharing important links throughout the webinar in the chat for all of you to access important information about the home buying process, as well as other valuable resources Affinity has made available with your membership. With this said, I'll turn it over to Carolyn. Carolyn, thank you so much for joining us this afternoon.
Thanks, Oscar. Welcome, everybody. This was the date, so let's just pass that. So this is a little bit of what we're going to cover today. As Oscar said, please write your questions in the Q&A. I'm happy to answer them. If I don't have the answer, I will look it up and get back to you, and I will request your email address for that. So we're going to talk about FICO scores because everybody hears about that. FICO models differ from FICO scores, how to obtain your report, what to look for, how to dispute, the breakdown of credit, and how to improve your score. So FICO has been around for a really long time, and your score is a 3-digit number based on the information on your credit report. Lenders determine how likely you are to pay your loan with them using the FICO score. They range from 300, which is a very low score, to 850, which is perfect credit. So there are quite a few different FICO models. And if you have Credit Karma or even our credit card, you'll get your score, right? Your FICO score. That's a consumer model, right? So that's FICO 8. That's FICO Model 8. Mortgages use a tri-merge report, and you can see by the slide that FICO 5 is used by mortgage lenders with information from Equifax. FICO 4 is used by lenders with information from TransUnion, and FICO 2 is used by mortgage lenders with information from Experian. Mortgage scoring and consumer scoring are different. So I've had members come to me and say, hey, I checked my FICO score and I'm a 740. I always caution them, on a consumer, you probably are a 740. I have seen drastic differences between consumer FICO 8 and FICO 2, 4, and 5, just to let you know. So how do you check, right? How do you know where you stand? By law, you're entitled to a free credit report from each one of the bureaus, so TransUnion, Equifax, and Experian, once a year. You can obtain that through annualcreditreport.com. Now, remember, you're going to get these slides probably by tomorrow afternoon or Friday morning at the very latest. So don't worry about writing this stuff down. You are going to get the slides. A lot of times they don't give you your score. I think you might be able to pay for them on on annual credit report. You don't have to though. Really, you want to get your credit report and you want to look for any inconsistencies, any incorrect information. So let's take a look at what's on your credit report. So it's your name, your social, your date of birth, your addresses, past and present. Your employers are on there. Open and active trade lines, any derogatory or collection accounts, and public records. So that would be bankruptcy, foreclosures. When you get your free credit report, I want you to look at each account. You must look at the accounts and your payment history. There are years ago, there was a store called ANS. This was many years ago. And they were famous for marking you late if you were 1 day over your due date. So you weren't really 30 days late, you were a day over your due date, and they'd mark you 30 days late. Sears used to do it too. So you want to look for that type of stuff. You want to look for incorrect information. You want to confirm that your date of birth, your social security numbers are correct. You would be amazed at how many times your social security your social security number has numbers inverted. So instead of being a 2-4, it's a 4-2. You want to look at that. You want to make sure that all your payments are logged as timely. There's nothing misreported as late. If you see a collection account, you want to address it. Did you know about it? Was this something that you took care of and you have the proof of? This is what I mean when you want to really check your credit. An error on your credit report can have it's data entry. Humans enter data, right? So they make mistakes. You can also have incorrect stuff if you're a victim of identity theft, which is a whole nother can of worms and very dangerous for the person whose identity is stolen. If you are disputing anything on your credit report and you have the right to do so, then you have to include certain things on the letter that you write. So it's your name, your date of birth, your social, your current address, and any previous addresses for the past 2 years. If you mail in your dispute, do it via US Postal Service. Now, as Oscar said at the beginning, I've been doing this over 35 years. So I'm old school. And what that means is I still pay my bills with checks. I don't really do a lot of online banking. If you mail your dispute to the credit bureaus, you need to provide them with your email, a copy of your utility bill, and a copy of your government issued ID. If you email your request, they may ask you just for your government ID and a utility bill because you never put your social or anything on a email correspondence, right? It's not secure. The reason why I say I would mail it is because the credit bureaus have 30 days from receipt to address your claim, your dispute. If you submit your dispute to one or all three bureaus based upon, so you can have a inaccuracy on Equifax, and Experian and TransUnion don't have that. So you only have to dispute at Equifax, right? So that's why you may be disputing to one or you may be disputing to all three. They have 30 days from receipt of your dispute and proof to review the information, verify the accuracy of the information they're reporting on, and provide the bureaus with the response or any information that needs to be reported. So think about this. The bureaus get over 1 million pieces of mail a week. I'm not even making that up. They get a tremendous amount of mail. The likelihood of them getting to your dispute within 30 days is kind of slim, right? Which means then they'd have to take it off your report. I always tell people, mail your disputes, return receipt requested. So it's that green little cardboard thing you get from the post office. Because once you get that green cardboard back, right? It'll have the date of receipt at the bureau, and then your clock starts ticking. The bureaus have 5 business days to notify you of the results of their investigation after it's completed. That's if they get to your piece of mail, right? If they don't get to it, they've got to remove it. So what affects your score? Your payment history is the most important thing. You must make your bills on time. Even one late payment on a perfect credit report can drop your score significantly. And your payment history accounts for 35% of your score. So it's really important. The next biggest item that affects your score is your utilization. So if you have a credit card and your limit is $1,000, they don't want to see you go above 300. They don't want to see you use more than 30% of your available credit. So the utilization counts for 30% of your score. They also don't want to see you use more than 30% of your line. So if you have a card and you're over that 30%, I'd work on trying to get that one paid down. The length of your credit history is another factor. That's 15% of your score. It's calculated by looking at both the age of your oldest account and the average age of all your accounts. If this is hurting your score, there's really not much you can do about it, because if you didn't have credit prior to when you opened it, you can't go back and rewrite history. If you have older accounts that you don't use, don't close them. They're not hurting you. They're not hurting you. Just leave them alone. The mix of credit that you have also affects your score, and that accounts for 10% of your score. And what I mean by that is they want to see that you have car loan, student loan, credit cards, a mix of revolving credit, a mix of consumer credit, not just all revolving accounts. And the last thing is credit inquiries. Don't have people pull your credit unnecessarily. So if you go to a store, this happens a lot during the holidays, you go into a store, they say, oh, do you want to save 10% by opening a card? Say no. Say no. Because if you go into every store and open an account, you're hitting your credit, right? You don't want to do that. If you have 5 inquiries on the same day, and it's for consumer credit cards, technically it's not supposed to affect your score, but it's different stores. So it probably does affect your score a little bit. Inquiries once in a while, that's okay. There's no reason to have a lot of people running your credit. How do you improve your score? The simplest way is to make your payments on time. I know that sounds really self-explanatory, but that's the truth. Pay down your balances to below the 30% of the line. Very important. And please don't ever go over your limit. The credit card company will allow you to go over your limit. They don't care. They're going to charge you higher interest, and that's going to ding your score. So please, please, please try and stay away from your limit, and please don't ever go over. If you have open collection accounts, try negotiating down with the creditor. A lot of times they'll settle for less than you owed. Yes, it's going to reflect on your credit that you settled for less than you owed, but it's also going to show that you paid it, right? So paying some is better than paying none. If you don't have any credit, we offer here at Affinity a secured credit card. And how that works is you deposit $500 with us. That $500, you can't take it back out. We'll issue you a credit card with a $500 limit. I always tell people use it for gas and groceries, and then pay it back, pay it each month, pay it sooner than each month. This gives you a credit card. It starts you on the traditional credit path. You can also improve your score if you have someone who's willing to add you as a authorized user to their account. So if they have good credit and they have a credit card, and they're willing to add you as an authorized user, you can benefit from their good credit just by being added to their card. Now, anything that you purchase on the card, you have to pay for, and you have to pay for responsibly because they're doing you a favor, but it's still a huge favor that they're doing. We're here to help always. We have these great credit counseling agencies, Navicor and Consolidated Credit, that as an Affinity member, you're entitled to free credit counseling through either one. I've seen them work really well with our members and really help members with budgeting, fixing their credit. So it's really a worthwhile endeavor for you to reach out if you're having problems. When you're thinking about buying a home, there's a lot of things to keep in mind. Again, don't have anybody run your credit if you can avoid it. I know I said that already. I'll say it over and over and over again because it's really important. Don't open new credit. And I said that. It's the same thing. So if they're running your credit and you're opening new credit, those two are dinging your credit report. Two separate things. You don't need it. Make your payments on time each month. There's a lot of steps to credit and credit scores. You're not alone. I have a team of loan officers that their only job is to help you achieve your dream of home ownership. And we want to, right? It's never too early. If you've been with us since the first webinar in this series, you know that I say that all the time. Have a conversation. Have a conversation. We'll guide you. If we can't help you, we'll refer you to Navicor or Consolidated Credit. But start with us. Here's the link to find the loan officers. And with that, I will open up for questions.
Fantastic. Thank you so much, Carolyn, for such a great presentation. Yes. At this point, we would like to open up the floor for any questions that any one of you may have. This is actually out of the whole series. I think this session is one of the most important, as nothing will be able to be accomplished if we don't have our credit in shape in order for us to start the home buying process. So with that said, there are a couple of questions already being asked. Let me go ahead and start with the first one. I have logged my Experian credit bureaus. The loan office looked at my credit score and it was locked. Then I unlocked it. Looks like they pulled 2 credit scores from Experian. Should I be charged for 2 credit reports?
So
increase perhaps?
No, we don't charge you for 2 credit. I mean, if you applied here, no, you wouldn't be charged for 2. I need a little bit more information. If we didn't know, and I'm just speaking for Affinity, if we didn't know that your credit was locked when you applied, when you apply, you authorize us the credit pull. We automatically pull it, right? Nothing comes up. It shows us that your credit is locked. The loan officer would reach out to you and say, hey, you've got to unlock your credit. I need to pull it. And then we pull it again. You would not be charged for 2 credit reports.
Fantastic. Great. Next question. Does an inactive credit card with 0 balance, not used over 2 years, then closed by the store without your consent, does that affect my credit score?
It can affect your credit score, unfortunately. I have a credit card that I only use once a year at the holidays because it's an old card and I don't want to close it. I know that doesn't help you now. But yeah, so if you have a couple of cards that you're not using, if they're store cards, just use it once, pay it back to keep it active. If that's one card only that was closed and you have other, cards and credit that's good and that you're using, then it shouldn't affect you too badly.
Excellent. Next, do you need minimum credit record?
So that's a great question. Fannie Mae and Freddie Mac, they like to see 3 open and active trades. So it could be a combination. It could be 2 credit cards and a car loan. It could be a car loan, student loan, and a credit card. But I have seen in certain circumstances that someone only has 2 pieces of credit and they've been okay with that. So shoot for 3 because that's the magic number. But sorry, I lost my train of thought. Shoot for 3. 3 is always the best.
Okay, next. What if I apply for debt consolidation loan and get approved? How does that affect me? Debt consolidation loan is through Affinity.
Okay, so a debt consolidation loan, we're paying off a however much debt you've listed, right? So it'll zero out whatever debt you had. It'll have the one loan. So you're not, if you're closing the accounts, you might get dinged a little bit because you've closed, several accounts at one time. If you're leaving the accounts open and you're just paying them off, you might also get a ding, but it shouldn't be that significant, depending on your track record.
Okay. If you have a stored credit card and it isn't used a lot, but you still have it open, will it be better to close it or to keep it open?
Just keep it open. It's not bothering you.
Yeah, I would suggest if you are not being charged like an annual fee or something like that, then it doesn't hurt you to keep those accounts open if you don't use them. But if you're being charged, just keep in mind that if you decide to close out the card, you'll be pretty much wiping out the whole credit history that you've had with the card. Some people think that that's a good strategy to improve their credit, where in fact they're pretty much hurting themselves. All right, next. I took a $10,000 loan. At first, I thought it was a loan, but to find out it was a line of credit. As a credit card with 18 months interest free. When they ran my credit dropped 26 points in Experian. I have set up auto pay $556 a month with Affinity. How do I get my credit score up again?
So I'm a little confused by that, because if you had only the one inquiry, I'm not sure why it dropped 26 points. That seems extreme for me. In my experience, auto pay is great because it ensures you never miss a payment. And how do you get your credit score up again? Honestly, don't have any new pulls. Don't have any new credit pulls. Don't establish new credit, and just keep making your payments on time.
Agreed. Next, I want to purchase a house, but I'm currently in need of a car. How will this affect my credit?
So listen, life happens, right? The car loan will be used in your ratio, your qualifying ratio. It's not a bad thing. It's not a bad thing. It happens. We've had people who've applied for mortgages and their car died in the middle of the process. And they call the loan office and say, hey, I have to buy a car. My car is old. I don't want to throw good money away into it. We just have to reconfigure the loan. So the same deal. You just have to qualify for both the mortgage payment and the car payment.
Okay. Next, how long does it take for inquiries to come off your credit report? And what if there's duplicate or inquiries you didn't authorize? In other words, when purchasing a car and the dealership is shopping around under your credit, having these inquiries will add up. What do you do?
Okay, that's a great question. So when you go to a car dealer, let's say you went to ABC dealer, the dealer pulls your credit. Then he shops your credit. He shops you, the buyer, around to his finance companies. That should all be done same day or next day. All of those inquiries should be one hit to your credit, because it's the same purpose and it's within 2 weeks, period, right? If you were to go to dealer ABC today, and then in 3 weeks go to dealer EFG, and they pull your credit and they shop it to their finance people, then you count as 2 hits. So even though the dealer, shops you around, as long as he does it same day or day after, it's only one credit report. Is it annoying? Credit pull, credit inquiry. Is it annoying? Yes, it is. Is it really drastically affecting your credit? No, unless you go to multiple dealers and you space it out over a 2-week period. And quite honestly, everyone, if you are going to buy a car, there's no reason for the dealer to pull your credit until you choose the car you want to buy. So if you go to, I don't know, Hyundai, and you look there, and then you go to Buick and you look there, Hyundai doesn't need to pull your credit, neither does Buick, until you decide on the car you're purchasing. I see a lot of people make that mistake. They go in to buy a car, they're shopping, right? You don't know what you want. You're not sure if you're comfortable driving it. The first thing they want to do is pull your credit. No, I want to test drive. I want to make up my mind, and then I'll let you run my credit.
Something else that I sometimes do recommend is let's say you're going to buy a vehicle. If you apply for a pre-approval and you bring up the pre-approval letter, you're bypassing that struggle of having people pull your credit over again. Okay. All right. So next question. Does refinancing on a student loan or car refinancing drastically affect your credit score?
Doesn't have to. Doesn't have to. There'll be an increase. There'll be a little hit, but it really doesn't have to. I know my daughter refinanced her student loan to get a lower rate and cut the term. So instead of paying for the next, I don't know, 40 years, she went down to 25 years or something like that. So as long as it's not multiple credit inquiries, you should be okay.
All right, next one. Is adding the utilities accounts to the credit report a good choice?
So I'm going to tell you that we don't look at that. Like when we see Experian Boost, we don't even count those. That's cable, electric, gas. That's currently, we don't count those. Fannie Mae and Freddie Mac are looking at beginning next year, 2024. I don't know what quarter, about maybe counting it. So let me say for right now, we don't look at that. And for next year, I don't know what's going to be yet. It's up in the air yet.
All right, next question. Does paying your credit card statement amount by the due date, but not the current balance showing on the website, which also includes purchases after the end date, show on your credit report that you are carrying a balance and impact your credit score?
Okay, that's a really good question. So the credit report only shows the statement balance. So let's say your statement is due June 9th and we pull your credit July 1st. It's probably not going to have your purchases on it yet. Some can, some can't, but that doesn't mean you're late, right? It shows your credit history. It shows your payment history. It shows your balance versus your limit. So let's say you pay, let's just say you had a $2,500 balance, right? And your payment was $100 and you paid it. And then you went and you had to charge new tires for your car or something. They were $800. We may or may not see that $800 added, but we're looking at the payment history. We're looking at your limit and we're looking at your usage. So if your line is $3,000 and you're at $2,900, that's going to affect you. If your line is $5,000 and you're at $2,900, you're still over your 30%. 30% of 5,000 is 1,500. We're looking for 30% or less and a clean payment history each month.
Yeah, very good. Next, how is your credit affected when applying to multiple mortgage lenders for the
Okay.
purpose of getting the best loan?
Okay. So if you apply to multiple mortgage lenders with within 2 weeks, it counts as within 14 days, it counts as one inquiry. So you could have 5 mortgage companies. You could have Chase, Bank of America, Affinity, PPAC, Gladstone, and Lakeside Bank, all mortgage departments making the inquiry. That counts as one inquiry because you did it in 14 days. If you do it, same thing like with the car loan. If you do it, Affinity today, Lakeland Bank in July, then you're going to get hit per bank or per lending institution.
Fantastic. Next, you said magic number is 3. I only have 2 credit cards. Adding UI or internet account will count towards the third magic number?
I don't know what UI and an internet account would not count. But remember, I said 3 is the magic number, but I've seen it go through with 2. You have 2 credit cards. Have you ever had a car loan? Have you had a student loan? If not, you know, I don't want to tell you go out and get a loan. Just keep paying what you have. They've become a little bit more lenient with the open and active trades.
Okay. Next. What is the loan origination fee for a home loan charged by Affinity? First-time home mortgage existing Affinity member.
So we don't have an origination fee. You can choose to pay points to get a slightly lower rate, but that's your choice. I know a lot of lenders out there have an origination fee. We don't have one currently.
Okay. What is the closing cost for closing a home loan?
So closing costs vary based on loan amount, as county where you're buying, but it's, you know, attorney, appraisal, title. In the first webinar of this series, I went over the closing costs in depth. And if you shoot us your email address, we can email you that presentation if you haven't already received it. And you could see a list of closing costs.
You guys are more than welcome to send me your emails, but also in the follow-up email that you guys will receive tomorrow, latest Friday, you will be able to you will receive all 3 recordings for the other part. So I can send you the recording beforehand, but you will all eventually receive part 1, part 2, and part 3. Great. Next, I apply for a debt consolidation loan today. Should I apply for a mortgage loan today as well, or will you use the credit report that was pulled through Affinity today?
We will not use the same credit report because debt consolidation only pulls 1 bureau. A mortgage requires 3 credit bureaus. The debt consolidation loan is going to pay off debt, which is going to show on your credit report. So I would have a conversation with a loan officer and make them aware of the fact that you applied for the debt consol. I don't know if you were approved yet or not, and go from there.
Very good. Next, what is the validity of a loan pre-approval?
Pre-approval is a very important tool in today's market. Pre-approval gives the seller peace of mind that you have been underwritten, you've been vetted by the lending institution. So your income, assets, and credit have all been checked and you've been deemed credit worthy.
Very good. I have a high utilization rate, but I can fix it in about 3 months. Can I apply for a home loan immediately after, or should I wait a couple of months later?
So you could apply immediately after, but we have to make sure that your pay down of the cards or your pay downs have been recorded and reported by the bureaus. So I would always wait to like the 10th of the month after you paid it down to give everybody a chance to report the new actual balance.
Okay. If I have a charge-off account, do you recommend to pay the account off before applying a mortgage?
Honestly, you don't have to pay a charge-off off. I would say, how recent was it? Maybe you could settle with the creditor, but I would talk to a loan officer first, have them pull the credit, and let's see if it's doing any damage to your score.
All right, next. I want to buy a multifamily home. I'm working with a credit builder as we speak, and I'm currently sitting about 650. I have capital, $50,000. What are my chances? Should I get pre-qualified for a home first?
So it's a 2-pronged question, okay? $50,000 is a substantial amount of money, but multifamily homes generally tend to sell for a substantial amount of money. So closing costs are going to be maybe a little bit higher because your purchase price might be a little higher. 650 is a mortgageable credit score, but it's going to give you a higher rate. So kudos to you for working with the credit builder. Can I answer you? Could you get a mortgage now? Possibly without knowing your income, looking at your credit report for myself. Can I guarantee it? I cannot, right? I always have to look at everything and weigh all the odds.
Okay, I was pre-qualified for a mortgage, but I don't want to move until next year. I need to get my credit card usage under 30% and I have and save more so I can have a decent down payment. Will my credit have been pulled again? I have a 100% repayment history. Very
Yes,
good.
your
So
credit would be repulled at the time of application. But if you did it now and then you pull it in a year, that's not gonna, that inquiry is not even a blip on the radar.
Good. When is the best time to refinance a mortgage? How many years after purchased?
So that depends on you, right? There's no right or wrong. Right now, rates are high compared to where they were, last year and the year before. So people are buying because they need housing, but their intention is to refinance when rates come down. It really just depends on what works for you. Your plans for the home. Are you going to stay there? Are you going to move? And that's something, you would talk about with your loan officer.
Okay, when is the best time to okay, I'm sorry, that was the previous one. How long of clean payments are you looking for?
Well, we're always looking for a history of clean payments. I can't give you a timeline, right? But certainly the last 12 months.
What is the current rate for a 30-year fixed loan?
So rates vary. The rates vary based on credit score, down payment, and other factors. I can give you a range. Today, they were ranging from 7% to 7.625%.
Do you offer down payment assistance?
So we do not offer down payment assistance. We have a lovely gentleman, James Goodman, who works with a lot of down payment assistant agencies, and he can refer you to them if you're eligible.
What is the current okay, you already answered that one. I recently had to open a new credit for a small amount which I intend to pay in full within the next few months. Once this loan is paid off, will closing the account be beneficial?
No, don't close it. Just leave it alone.
For a credit score of 800, use an Equifax report. Okay. Okay, so this was kind of like
Yeah, I
the
can't
rate.
answer that for the rate. Yeah, I can't answer that.
Okay.
I gave a range of rates based upon today's market.
Agreed. Okay. All right. Send me the webinar, so I'll make sure the Mrs. Williams receives the webinars. Is there a charge to help fix my credit?
With Navicor and credit, consolidated credit, I don't believe so. I think it's a benefit of your membership.
Okay. Yeah, no, just to confirm, there is no fee, but you need to let them know that you are a member. That way they don't charge you. Okay. What is the minimum credit score needed and a good down payment for a first-time homeowner?
So minimum credit score is 620, but that's going to net you the highest rate. And a down payment for a first-time home buyer, I mean, we've done, 3% down. We've done 0% down with, but you have to qualify for that one. So it depends.
Okay, can you explain the difference between pre-approval and pre-qualification when shopping for a home?
Sure. So pre-qualification here at Affinity, we do pull your credit, but we don't verify any income or assets. So we base everything upon what you say. So if you were to reach out to one of our loan officers and say, hey, I make $100,000 a year, I have $25,000 in the bank, how much home could I qualify for? This is the area I want to purchase in, and the taxes average X each month. We can do a quick calculation and say, based upon the information you've provided me, you would qualify for a loan amount of X. A pre-approval, we verify everything. So we pull your credit. We have you supply us with your tax returns. If you're a W-2 employee, if you're self-employed, we get your tax returns, your bank statements, any other information that we need. We submit it to the underwriter, who's the decision maker on the loan. And then we would issue a formal pre-approval letter saying that you've been underwritten and approved.
Okay, next. How is the process for a HELOC?
So HELOC, you have to own the home, and you have to have equity in it. And you can apply for a mortgage, you can apply for a HELOC to take some of the equity out of your home.
Okay. Would you consider a good idea to take out a loan to consolidate debt? Example, credit cards of 7+ acts, especially when most accounts, 7+ accounts, especially when most accounts are over 30%.
Yeah, it's a great idea. It's a great idea.
Is the best time to take a home equity? When is the best time to take out a home equity loan?
That depends on you and your situation.
Okay. Can Affinity assist me if I plan to purchase a property in New York?
Yes, we lend in all 50 states.
Okay. Does my income affect my chances of getting an FHA 203 loan to get a multifamily?
I don't offer FHA loans, so I'm really not comfortable answering that because I don't know the answer. So I don't want to tell you something that's not true.
Okay, agreed. I would like a copy of the webinar as well. Thank you. Fantastic. Yes, I'll make sure you receive it. If I have a townhouse as an investment, how hard is it to refinance and have cash out?
So we here at Affinity only offer investment loans on primary residences, but there are lenders out there that will let you refinance your investment property.
Okay, after 3 years of selling my house, am I considered a first-time home buyer again?
You absolutely are. Fannie Mae defines a first-time home buyer as anyone who has not had interest in real property in the past 3 years.
Okay. What are the requirements to apply for a HELOC?
Honestly, I don't handle HELOCs, so I don't know. You can call our member service center in the morning and they can help you with that.
Okay. What would you recommend for someone who has a lot of debt, like 2 car loans, student loans, and credit cards, and trying to buy a home?
So that's not as easy to answer as one would think. And the reason why is if you have substantial income and the credit cards are not that high and the student loans have the car loans have reasonable payments, you might very well qualify for a mortgage as well. Other circumstances, the car loans might be, taking a lot of your income each month. Honestly, I'm going to say talk to a loan officer, have all your payments, your balances ready, and they can work with you and figure it out. But I can't really answer that right off the top of my head because there's too much other information I would need.
Okay. How many months of bank statement is needed when purchasing a home or years of income tax?
So 2 months bank statements, complete statements. So like Chase Bank always leaves the last page blank. Everybody knows the last page is blank. We still need it. So if you have 1 of 6, we need all 6 pages for the past 2 months. And tax returns is 2 years.
Okay. Next, I would like copies of the previous webinars, and you will receive those copies. What I'm going to do is I can send out an email to all of you who attended with the links of those links that I'm sharing in the chat. As you guys can see, there's one of those messages that says the slides for today's presentation can be accessed here. So what I'll do is I'll send you guys the the links for all 4 sessions. That way you guys can get the slides for the sessions. And the follow-up email will contain the link for the 4 recordings. So you guys will be able to have all the materials very shortly. Okay, thank you so much. Do you offer multifamily loans, and how, if so, how many units max?
1 to 4 family is considered residential, so that would be handled here in my department. If you were looking for 5 units or more, that would be handled in our member business department.
Okay. How do you calculate student loans that are on payment deferment?
So deferment, if you, I think Fannie Mae just changed the rule on that. That's a great question. So if you're deferred, we have to take 1% of your balance. So if you have a $2,000 balance, we're going to take $20 as your payment. Unless you're on an income-based repayment plan and you have the documentation to support that, then we take whatever that is. But otherwise, it's 1% of balance.
Okay. If I live in Connecticut and own a home and I want to buy a house in North Carolina, how does the housing in North Carolina considered?
Well, the North Carolina home could be considered a second home or a future primary residence. So let's say you live in Connecticut, you work in Connecticut, but you plan to retire to North Carolina, that's a future primary.
Okay. Next, can you repeat your statement about first-time homebuyer in 3 years?
I absolutely can. So Fannie Mae defines first-time homebuyer as anyone who has not held interest in real property in the past 3 years.
Okay. Next question is a comment. It says, I don't have a link. Here, I'll share the link for the slides right now for everyone to see. Should be in the right now on the chat. That's just for today's session. I will send you via email the links for the other 3 sessions. Okay. How long will the webinars be available? Okay, so the webinars are recordings. So for the second quarter of this year, we had this series. It was a 4-part series, and every time we presented, this series happened every Wednesday at 6 for the last 4 weeks or so. Every time we presented, we recorded the webinar. So the recordings will be available forever, as long as you have the link. So the only thing that you will need to do is you will need to register to be able to rewatch the presentation, and then you can take notes and revisit any concept that you may have missed. But these webinars do not have, if you have the links, they don't have like an expiration date or anything like that, okay? Next, if I'm looking for a loan in Georgia, what rate will I get on a single family home?
You get the same rates as everyone else. So it's based on credit score, loan to value, other factors, but state does not factor into it.
All right, next, can the webinars be shared with anyone else?
Absolutely.
Yes, they can be shared. The only thing is, like, you guys cannot download it. So you're more than welcome to share the link. And if you want to give it to a friend or a family member, they can join and they can rewatch the presentation. Unfortunately, we're not allowed to provide the webinars as a downloadable link. Okay. All right. Next, what type of documents do you need for the income-based plan payment?
Well, that's up to your, if you have federal student loans, there's documentation that you would fill out and that your lender would provide you with your required payment.
Okay. Next question, can you please explain what does future primary home mean?
Okay. So let's say I live in New York. I'm working in New York, but I want to purchase a home that I plan to retire to. That is a future primary residence. A second home is a house down at the shore that I plan to this now. The Fannie Mae defines a second home as something that you occupy for only 14 days out of the year. So like a vacation home. For our purposes here at the credit union, our regulator only allows us to offer 15-year mortgages on second homes. On a future primary residence, I can offer a 30-year mortgage. So sometimes that distinction is a very fine line.
Okay. What is the distinction between a second home and a future primary home in terms of the lending process?
I think I just answered that.
Yes, you did. I apologize.
I didn't mean, no, I didn't mean to. I didn't know that question was coming.
Yeah, I guess it was very similar to the previous one. All right, very good. What is the minimum income requirement to apply for a mortgage?
There's no minimum income. I mean, depends on the loan amount, depends on, I can't answer that question. I'm sorry.
Okay. Yeah, it's relative.
There's
to
too
your
many
debt.
factors. Yeah.
Exactly. Okay. What do you look at when you're purchasing a home with someone else, like an adult, children? How does it work with the credit score?
Okay, good question. So, and it's a little confusing. So if I confuse you, just hit us up again with another question. So right now, we take the low middle score. Okay, that's what we base the interest rate on. So let's say borrower 1 has 850, 825, and 800 credit score. Let's say adult child has 700, 650, and 600 credit score. We're going to use the 650 as the low middle score. So it does play a factor.
Very good. Is there a time frame that one needs to move to a future primary home?
Nope. Nope.
No time frame. Okay. All right, very good. So this brings us to the end of the questions. So far, there has been 61 questions asked. So this has been great. And thank you so much for your engagement, everybody, because these questions are valid. And that's why Carolyn is here for. Okay. Actually, question just popped up. How do you calculate mixed income? For example, I'm salaried, but I also receive commission.
So we would base your commission on, we would average it over the past 2 years. And we would use that as your monthly, right? And then your salary, we would just count your salary. Does that make sense?
Okay. All right. And the member just answered that yes, it does make sense.
Okay. Okay.
Thank you so much.
Sometimes I confuse myself, everyone, so that's why I'm asking.
Very good. Next, if you file your taxes jointly, can you still apply for a mortgage loan?
Yeah, of course.
Okay. If my child is starting college, can she qualify for a home loan?
So, you know, it's interesting because we just had this come up in real life today. So you have to be 18 years old to own real estate in the United States. Secondly, what's her income? Because she's in college, right? Does she have income? Does she qualify for mortgage? What happened today was we had a member who wanted to purchase a condo for his daughter by her college, but he wanted to put her on the deed. That's perfectly okay. She can be on the deed. She can be on the mortgage as well, because he wanted to also help her establish credit. And he was going on the loan as a non-occupant co-borrower, and he had all the income. So hopefully I answered your question to your satisfaction. I hope so.
Okay, next. Can my name be on a title but not on a loan?
Yes. But the person who's on the loan has to qualify.
Okay. Can I consider that home as it is mine when including my assets?
I'm assuming this is the same person asking the question?
Correct. Yes.
Okay, so if you're on the deed, that's your asset.
Okay.
Whether you're on the mortgage or not. You technically own that house. The
Fantastic.
property.
Very good.
This was really
once-
good, everyone. These were great questions.
Mhm. We go back to the member who has a daughter going to college. So
Uh-huh.
she asked, if she doesn't have an income yet, how would it work?
We would base it, so you, the parent, right, would have to income qualify for that house and your own housing, right? So if you own your home, we would be considering your housing payment. If you have a car payment, as long as you income qualify for everything, she can be on the mortgage, she can be on the deed, but you would be the income we would be using.
Okay.
And I
Very
put my
good.
email address back up there if anybody wants it, Carolyn M at Affinity. I know I heard from one member already and I put her in touch with one of our loan officers. I'm happy to hear from you. I answer every email. You guys obviously aren't shy because you asked some great questions tonight. I hope I was able to answer them to your satisfaction. If I didn't, or if you want to be more in depth, please email me.
Okay, very good. So this brings us to the end of the questions once again. So with that said, thank you for all the help. Well, you're welcome. That's why we do these kinds of webinars, so we can provide you with the information required in order for you to have a successful home buying journey. Okay. With this said, I would like to bring this webinar to a close. I want to thank everybody for your time. These series are happening this year every quarter. So the next series that we'll probably have will be somewhere in, I don't know, maybe in August, perhaps. So I wish everybody the best of luck in your home buying process. Please reach out to Caroline or any one of our home loan officers to start the process, or at least have a conversation. It doesn't cost you anything, and at least you already know where you stand and what you need to do, right? And with that said, Caroline, do you have any parting words?
Sincerely, thank you everyone for attending. I hope you found it useful, and please email me. I'm happy to hear from you.
Fantastic. Thank you everyone once again, and I hope to see you guys in the next series. Have a wonderful evening. Bye, everybody.